Welcome to The Organized Expat, brought to you by Tytle, the platform for expat taxes. Hi everybody, welcome back to our show. Today it's simulation day, and as frequent listeners might know, we have two kinds of simulations. The first one is that we look at one profile, let's say crypto trader, and how that crypto trader is taxed in different countries. But the other simulation is about one specific country, and then we look at 5 profiles. So today that's going to be Italy, and I'm here together with Laurens, the tax expert and especially knowledgeable about expat taxes.
Hi, everyone.
Hi, Laurens. So, Laurens, what are the profiles that we're going to have a look at today for Italy?
Right. Today we're going to have a look at employment income of around 36,000 euros per year.
Okay.
Pension income for the same amount.
Pensions, number 2.
Yeah.
Okay. And what was the amount of income, the income level that you have as a pensioner?
36,000 per
also
year.
Also 36,000.
3K per month.
Okay, same amount. Yeah. The third one?
Then number 3 is a remote worker, 60,000 per year. We're going to have a look more at freelancers in that category. Then a crypto trader, 78,000 per year.
So that's the fourth one, the crypto trader. And the crypto trader gets has the highest income level so far.
Exactly. And then the fifth one is investment income of 120K per year.
Okay, so that's even higher. So those are the 5 profiles. And if one of those profiles fits you, then it's especially interesting to listen to, let's say, the tax treatment that you will get in Italy that we'll discuss in this podcast. And if not, you're always welcome to send suggestions about other profiles to us. But for today, it's going to be these 5 profiles. So let's get started with the first profile, which is employment income at 36,000 euros a year. Okay, Laurens, tell us, what to know about employment income at 36,000 euros a year in Italy?
Right, so for employment income, you have the regular tax brackets in Italy, the progressive tax brackets.
Only 3 of them.
3 of them, exactly. So 23% until 28,000, 35% until 50,000, and 43% above that.
Yeah, and we concluded that that's relatively low because in many European countries, you see top brackets nearing 50% or even perhaps over 50%.
So that's low, and it's also quite simple because other countries often have 5 or 6 tax brackets even. So 3 tax brackets is quite, let's say, simple, concise.
Yeah.
And then there's a 9% social security contribution for employees, and employers also contribute, of course. But for employees, it's 9%,
which is also relatively low.
Yeah, exactly. So for an employment income of 36,000, your net pay would be around 24,000 for regular employment income. And then, of course, for the expats listening, you have tax breaks. The repatriate regime in Italy, which as of this year is 50%. You have a 50% tax break. So of that 36,000, only 18,000 would be your taxable income.
And here it's important to note that the impatriate regime is only for people who are completely new to Italy or completely new. The rule is that you cannot have been an Italian tax resident.
Yeah, for like the last 3 years, top of my head. So you need to be, let's say there needs to be some kind of law fiction.
Freshness.
Some kind of freshness. Yeah. So if you're new, you can apply for a 50% tax break, sometimes 60% if you have a child, and there's some requirements as well.
Yeah.
Which now only applies to certain high value adding professions, and you need to prove
higher education,
etc.
Yeah.
So it can be between 50 and 60%, and in that case, only 18,000 would be your taxable income. So it would automatically be in a lower tax bracket.
And yesterday, I believe we got a phone call from somebody who was only interested in southern Italy because the tax break would apply only to southern Italy, and then we had to tell that person that that's not the case anymore because it's now all of Italy. It doesn't matter.
Right. I mean, back in the day, as in last year, it used to be the tax break used to be 70% in general and then 90% in southern Italy. So southern Italy was even better than the rest of Italy. Right now, the 50%, it doesn't matter if you live in Milan or in the south. It's just a 50% tax break and 60% if some specific conditions are met. But that north-south distinction is not there anymore in patriot regime country.
So so this regime applies throughout Italy. Doesn't matter whether you go to the north or to the south. It's always 50% or 60% if you come with a child.
Yeah, exactly. And so if you have those tax breaks, assuming 50% tax break, your net pay would be around 28,500, which is maybe a bit lower than you could have imagined. That is because, of course, you need to pay the social security contribution on the full 36,000 euros. So it's not that the 9% social security is only paid on 18,000 in our example. So that's why it could be the net pay could be a bit lower than anticipated when I'm telling you, okay, there's a 50% tax break. But there's still a good difference between
But still, if you're an Italian who lived all their life in Italy and you're making 36,000 euros a year, you're taking home 24,000. If you're from the Netherlands or Germany or Spain, doesn't matter, from outside, and you're fresh to Italy, and this regime applies to you, then it's 28.
Exactly,
28.5.
29, etc.
So more than 4,000 per year more.
Exactly, for this income level. And the differences can get bigger for higher income levels. And I mean, of course, this is for indeed people from the Netherlands or Germany, but also Italians that return to Italy, which was the original purpose of this regime as well.
Expatriates. First you were an expatriate, an expat. Now you're coming back to the patria, to the country, and that's Italy. Okay.
Exactly.
The second profile is pension income at the same level of 36,000 euros per year. What happens then?
Right. I mean, because it's pension income, you don't have to pay social security contributions anymore over that pension income because you did that while you were working. So we calculated the net income in this scenario is 29,000, which is...
I think that's quite normal. That's not only in Italy, that's very often the case that you don't pay social security over pension income because you already paid it when you build it up.
Right. So when looking at the 5 countries in Southern Europe that we often discussed, and in 4 of those countries you indeed don't pay social security contributions. In France, you pay a lower tariff. So it's normally around 20-something%. And then for retired persons, it's around, retired people, it's around 10 or something. And then, of course, in certain villages in southern Italy with less than 20,000 people, you can get a 7% flat tax rate if you actually go live there. And in that case, your net pay would be between 33 and 34,000 on a 36,000 euro income.
Okay.
But it's not as accessible, of course, that program. It's just, some municipalities in the south. So as in they still do try something to get people to the south of Italy, give that some kind of economic boost. I don't know in how far you do that.
So what they're trying to do here is getting hopefully rich people from other countries to southern Italy. Perhaps not so much to boost the economy with business activity, because when you're a pensioner, it's unlikely that you will start a business there. But it's more to spend your money in southern Italy.
To spend the money, exactly.
Which makes sense. That could be a good
incentive. And that 29,000 is also maybe a bit higher than you could have imagined for normal pensions, because there's also some allowances, some parts of your income that are untaxed. Let's say the first, 8,000 or 9,000 euros. And then there are some special rules for that as well.
And southern Italy can be beautiful. So there are very nice villages down there. I've been there quite a few times. And
you know it better than I do.
I recently went to Calabria and Tropea, I remember, a coastal village, which is really beautiful. I don't know how many inhabitants, so maybe it doesn't qualify. But I would definitely be willing to live there as a pensioner. I think it's really beautiful, and Sicily is also beautiful. It has very beautiful parts, also parts that are a little bit more sketchy. But it's as long as you know where you have to be.
And if you had to choose one place in southern Italy to live, what would you pick?
Yeah, difficult. I like Rome a lot, and that's the center of Italy.
Exactly, yeah.
So I think I'll stick with Tropea, and Puglia, of course. It's beautiful. It's really beautiful and very nice people, very kind people. So many options there. So the third profile is the remote worker, making more. 60,000.
Exactly. And we will narrow it down to just freelancers because remote workers can be employed or self-employed, of course. But for this podcast, let's stick to freelancers. So there are a few flavors, let's say. You have the simplified regime in Italy. If your turnover is less than 85,000 euros a year, and in that case you pay a flat tax of 15%. Over a percentage of your turnover, and in most cases that's 78% of your turnover.
Yeah, and we discussed this before. So it's not your income that you get on your bank account; it's that income minus 22%, something like that, as expenses. So they assume that 22% will be spent on computers, printers, what have you, will be reduced by that amount, and then they will look at what income is still left, and then they will start taxing you.
Yeah,
that's
exactly.
the way it works. Okay.
And then there's also 5% flat tax under the simplified regime, but that is just for starters. So if it's really your first business, and then there are a few requirements to make sure that it's actually your first business or freelancing activity.
Yeah. There are no workarounds. So if you think that you just give it a new name, or that's not an option.
Yeah, and then there's
which is very low, 5%. So that's
but then of course there's a 26% social security contribution, which is higher than the employed people. Because they pay 9%. So if you look at the net pay for the simplified regime for these two scenarios, so either people that pay 5% flat tax over 78% of their turnover. So if you're under the 5% regime, you will take home around 47,000 per year. And under the 15% flat tax, you would take home around 41,000 a year. Which is all quite good, because the social security contribution is also only paid over the, let's say, fictional profit, the 78% of 60,000 in our example.
So that step back, so you go from amount X to amount minus 22%. And that's where the amount for the social security contributions, and it's not the real income that you had in that year.
Exactly. So you pay over that amount, you pay social security contributions and taxes, 5 or 15%.
So 60,000 as a remote worker. If you're just starting and you apply for you're qualified for the 5% tax rate, you take home 47,000, which is really a lot. So that's compared to what you get. Otherwise, it's going to be 41,000 if it's the 15%, 15% regime.
Right, and then you also got the impatriate regime, of course, and that cannot be combined with the simplified regime. So you have to choose. So in practice, you see that people who do not qualify for the simplified regime, that they opt for the impatriate regime in this case. But I mean, in our scenario, we have
and the other way around, maybe.
Yeah, exactly, and we have an income of 60,000 in our scenario. So that's under 85,000. So most people will look at the simplified regime in this case. But it's good to notice that you cannot have them both at the same time. And at most income levels, you can just look, what regime will give me the best results, the highest net pay.
So that's a moment of reflection that you should look into that. What's going to yield the best results?
So for 60,000, for example, if you apply the numbers of the impatriate regime, so you get a 50% discount first on your income, then you would take home around 38,000, which is lower than the numbers that we just covered because you paid a social security contribution of 26% over your whole income of 60,000. And that's the difference. So in general, the simplified regime is definitely the easiest. If you earn 60,000, which is our example, and makes Italy very, very attractive.
Yeah, attractive. And here again, plan ahead. So don't just take a decision. It's always good, especially when you come from the US with the LLCs that often give headaches for many people. So it's always good to plan ahead to know how you're going to approach it, what's the best regime for you. So that's a piece of advice here. Crypto traders, that's the fourth profile.
Yeah.
Are crypto traders happy in Italy, do you think?
Well, I think it's quite average if you look at the rest of Europe.
Not unhappy.
They're not unhappy, not happy. I think Portugal is still the best crypto country. But for the rest, most lawmakers are developing some kind of legislation to combat crypto incomes. I'm saying combat, but to tax it.
So to tax it, and at the same time, they don't want to overtax it because then you're also chasing away people or not attracting people that might be interesting and
so there needs to be some kind of middle ground, and I think Italy has done a reasonable job in that.
Okay.
So if you look at the numbers, Italy has a 26% flat tax, which is the same as their capital gains tariff. So in a lot of countries, you see that the crypto tax rate is the same as just ordinary capital gains tax rate.
So it doesn't really matter whether you buy shares and you sell them with a gain or whether it's going to be crypto.
Which makes sense, I think.
Yeah, it makes sense, but at the same time, crypto, of course, is invented as a currency. So it's funny that it's seen more as an investment or than as a real currency to pay with. Yeah.
I think it's just how most people use it when they're buying when they're buying crypto. They're just looking for some kind of gain, I expect at least. It's 26% flat tax. The first 2,000 are exempt. So on the 78,000 that we mentioned, the first 2,000 is for free, let's say, and then after that you pay 26% tax. So that would be around
over 76%, not 78%, because the first 2,000 are under the exemption.
So 76,000. Indeed, and then 26% over that, which is around 20,000 in tax that you would pay over that. And alternatively, you can also choose another regime, which is basically 14% of your portfolio value at the start of the year. And there again, you just have to calculate which of the two regimes. So either just 26% flat or 14% over your portfolio, whichever yields the lowest tax burden. And then people decide for one of the two regimes based on the calculation, let's say.
Okay. So 14%, 14%, that's often the tipping point. Is if you're making more than 14% on your crypto, then it might be interesting to...
Right, so it's at 14%, so over your whole portfolio, and the 26% would be over all the individual trades, let's say.
Oh, so you have to do a calculation on that.
So whichever makes more sense for you.
And mining for the people who are not into crypto, that's that your computer solves all kinds of difficult mathematical puzzles in order to verify transactions, create new currency. So if you're doing that, that's not really trading. It's more working for your money, for your crypto. If you do that in Italy?
That will, as in it's not clearly defined in Italy yet, because of course everything is new. But it's most likely going to be considered a regular income. So you will just pay the same rates as under normal personal income tax. So it will just be progressively taxed. That's most likely.
So it's not that mining is coming back to Italy, but then in a crypto shape.
Exactly.
Because of this, it's just normal income.
And yeah, one last thing to touch upon here is that crypto to crypto trades are also taxable in Italy. So that means that if you, for example, trade
Bitcoin to
Bitcoin for
Ethereum.
Ethereum, exactly, and then you make a gain on the Bitcoin because you sell it for more than it was worth. That's also a taxable event. Same in Spain, for example, but other countries like Portugal, Greece, France, there's not a taxable event.
Oh, yeah. So it really have to become a currency that we all know and use before it gets taxable.
Exactly, in those other countries.
In those other
And in
countries.
Italy and Spain, even crypto to crypto trades are taxable, which I assume is also harder to track, I think.
Yeah.
But yeah.
So if you make a huge Bitcoin gain, not a euro gain, but a Bitcoin gain, then it will be taxed in Italy. That's good to know. Crypto to crypto is taxed. And is there anything else that we would like to discuss about?
No, I think this is about it for crypto currencies in Italy. So we can move to the last profile.
To the biggest fish.
The biggest fish,
Yeah, the investment income at 120,000 euros a year. So what happens to that big fish in Italy?
So with investment income, we're talking about interest, royalties, dividends, capital gains, and everything, which are sometimes, depends on the tax treaty, of course, but let's say all of this is taxed in Italy. Then you have a 26% flat tax. So it's the same tariff as for normal crypto gains. So for 120,000 investment income, your net income would be 89,000. So it's 74% that you keep. And then, of course, you have the option in Italy to buy off your foreign capital gains for 100,000 a year, which will be 200,000, which doesn't make too much sense for this profile to talk too much about that. But let's say if you earn, if you have higher
millions a year,
income,
then probably
millions a year, then you will probably want to buy that up for 100K, which will be 200K. Instead of paying 26% over that. And then you can also see that the numbers make sense.
Yeah, because for people who think I make more than 100,000 a year, so this might be super interesting for me. No, probably not, because it's about paying 100,000 in taxes a year.
Exactly.
And if that applies to you, then it might be interesting to tell the tax authorities, because you're allowed to do that in Italy. Here you have 100,000 euros and no questions asked, that's it. And that's going to be 200,000. So that's going to cap your taxes. But it's not about your income, it's about your taxes. So probably you'll have to make millions as an investor in order for this regime to be attractive for you.
So even if you look at a million, I think, then either 100,000 or 260,000. But it's good to know that this regime is for foreign income.
Exactly, foreign income, and it's a nice regime to fall under. Okay, I think that was it for Italy, the 5 profiles. Again, as always, if we missed something, if there's a profile that you would like to see discussed in one of our shows, then let us know. We think this is a good, let's say, cocktail of profiles, mix of profiles. But we're always open for improvement. So send an email to hello@Tytle.io if you're interested, or if you would like to share a suggestion with us. And otherwise, we'll see you next time in the next show. And that's it for now. Bye-bye.
Bye.